What if I told you that the biggest moves in the market are not random at all, but carefully engineered to trap retail traders over and over again? Today, I'm going to show you my own strategy that exposes this exact manipulation. I call it the institutional trap. And all you need are just two elements. The first one is quarterly opening levels, and the second one is breaker. That's it. When you put these two together, you will start to see institutions set the trap. And more importantly, how you can position yourself on the right side of it. This works on any chart, any time frame, but when you apply it to the monthly chart, the win rate is unbelievable. Before we move on further, make sure you subscribe and hit the notification bell so that you don't miss the next powerful tip I share with you. So we start analyzing chart by choosing 3-month time frame. We start with 3-month time frame because each candle represents one quarter so that I can define their opening levels easily. Let's start with this candle. This one is July. Since it is up candle, opening level of this candle is right here, $89. And this red down candle represents fourth quarter, and the starting of fourth quarter is October month. Since it is down candle, opening level of this candle is right here. I will not highlight January candle because opening level of this January is very close to July candle. So now we will go to monthly chart and see all the necessary details. As you can see here, after this up candle, price dropped significantly, then went up again and regained this level that lost previously. So I will define this level as a bullish breaker because it started as bearish order block, pushed price to the downside, then after taking this sell side liquidity here, price regained this level, which is green box. Since there is this quarterly opening level, which is $105, and bearish order block and bullish breaker, which is this green box, I expect if price ever comes back down to this level, which I expect because I expect these bullish breakers and quarterly opening levels works as a price magnets. I can be buyer in this green box and this quarterly opening level, which is $105. Let's play the chart and see how price reacts to these levels. As you can see, price revisited these levels, and my expectation is to the upside because previously here, price faked this down move and went up again and regained this level back. And this bullish breaker on a monthly chart, when you combine with quarterly opening levels, they have one of the strongest confirmation you can ever see on technical charts and comfortably bet on trend continuation, which is up. So that's it. That's how you detect and use institutional trap by using only two elements, which is quarterly openings and breakers. Breakers are strong confirmation because it is already a concept that confirms fake movements. When you see institutionals are faking, you can see the real direction and move along with institutional traders. So that was the end of the teaching. I hope you liked it, and I would really appreciate if you subscribe and like the video. So see you next time.